Hi, Jordan here from ASM-Trading, your one-stop shop for everything Forex. So in today's video, I'm going to be sharing with you one of my favourite swing trading strategies. This strategy really is the bread and butter of my strategy arsenal and proves to be profitable time and time again. So without further ado, let's just get right into it. So the strategy I'm going to show you today is got to be without a doubt my favourite strategy to trade in Forex. Now, it's a swing trading strategy, and what that basically means is you're looking to capitalise from one price movement in the market. So you're looking at the highs and the lows in the market and place a buy or a sell and capture that one swing in price movement. Swing trading is one of my favourite trades to take because it gives you clear take profit and clear targets and is easy to find the setups as well. This strategy was created by myself. I done so by doing a lot of vigorous back testing, finding out what confluences work the best, and I'm going to share that with you today so you can become profitable in the market too. So before we actually get into it and go through the actual rules of the swing trade, I want to talk about some ground rules for a successful trading strategy. Now, you've got to understand that when you create a new strategy, it needs to have a certain set of rules and they need to be strictly followed. And why is that? Because if you don't have a certain set of rules and don't follow them, then you may get emotional and you may not actually figure out whether that strategy actually works or not. Any strategy that you come up with or you take from somebody else, it needs to be back tested in the markets. So even if you're going to take the rules that I'm giving you today, you do need to go away and actually test them yourselves so you can get an understanding of how it works and make the strategy work best for you and your trading style. The worst thing in trading, I would say, without a doubt, is emotion. Now, emotion can get in the way because, let's say, for example, you are in a trade, you've set your rules, and you see the trade going against you, and you're worried it's going to hit your stop loss, and you start getting emotional about it, and you close the trade early, then actually the price reverses and goes on to hit your take profit. That's just one example of how emotions can get in the way. So it's really vital to train yourself from the get-go to stick to those principles and those rules and just completely leave emotion at the door. And to help with your emotion, this is really important, is never over leverage yourself and keep to a strict risk management. If you're not sure about risk management and how to do it, if you go back on my Forex for Beginners tutorial, I talk about using risk size calculators so you're never going to risk more than you intend to on each trade. What's also really important with any strategy, whether it's this one or another one you're going to be testing, make sure you keep a journal or log of every trade you take. In my Discord, I'll be sharing how I log trades myself, and I'll be sharing my spreadsheet. But if you're not into using Excel or any software like that, even if you're just making a note in a notepad, that will be suffice. When you're using a strategy, whether it's back testing or using in the live markets or on a demo account, judge its success rate over a period of time and not one or two trades. The reason I say that is because it's really easy to have one or two losses and you think that the strategy is not working for you, but it might have one or two losses and go on to win 6 over a period of a month. On the other hand, you might have 2 wins in a row and you think, well, this is really, really good strategy and I'm going to up my risk. And as soon as you up your risk, you might have 4 losses in a row. So judge its success over at least a month, I would say. And if at any point the strategy stops winning, just revisit, start back testing again and redefine your rules to make sure you can get it right in the next trade. Now, when I said about letting emotion get in the way, if you do that, then when you go back and back test, you're not going to know which rules are actually failing for you. So by keeping strict with your rules, you can find out which rule is not working, maybe replace it with another or find different confluences. So let's get on then to the swing strategy rules. So first of all, let's talk about some of the indicators you're going to need set up in your charts. So I use a few different indicators, and these are just additional confluences to confirm when I'm entering trades or to confirm when a setup's coming up. So the first one you're going to need is the MACD. Now I talk about the MACD in my trading view tutorial. It stands for moving average convergence divergence, and it's a really good indicator. Also, you're going to need the RSI, which stands for relative strength index. You're going to need to set yourself up with 100 exponential moving average and also a 50 exponential moving average. So just get them set up in your charts first of all, and when we go on to the live charts later, I'll show you how these indicators come into play. Now, with any strategy, you're going to want to establish what time frames you're going to be looking at. With swing strategies, usually they are on the higher time frames compared to something like scalping. If you're going to be doing something like scalping, you're going to be looking at the 5-minute time frame, sometimes even lower. But myself, I use the 4-hour time frame and the 1-hour time frame. I use the time frames for different reasons, and I'll explain that as we go along. So we need to talk about then the area of value. And where do we find the area of value on the chart for this particular strategy? So if you note back to one of my previous videos, Forex for Beginners tutorial, we talk about what an area of value is. And it's basically a point on a chart where traders are going to be looking for entry signals. So where on this chart do we want to look for buys or look for sells depending on the chart itself. And the areas of value that I look for in this particular strategy are typical support and resistance. This can be in a ranging market, or it can be on a bullish or bearish market. We're going to be looking for support and resistance on the EMA lines, and the exponential moving averages, especially the 50 and the 100s, can be a point of support or resistance on a chart that you wouldn't notice without it, that a lot of other traders follow. And we're also going to be looking and drawing in trend lines and looking for support and resistance around those trend lines too. So now the price has moved into an area of value for you, and then you have the right confluences in place to give you the green light to set the trade up. The next thing you're going to want to think about is where you're going to place your take profits and your stop loss. Now, on this particular strategy, with the take profits, you use 2 take profits. The reason for that being is the take profits target 2 different areas. One will be a bit more conservative to make sure you're taking some profit from the market. The other one will be a little bit more ambitious, that if the price does run, you're going to capture that larger sum of profit. And how it works, for example, is that if you are going to be risking 1% on this trade, then you set up 2 separate trades, each risking 0.5%. So if they do both hit stop loss, then you're still only risking 1%. Take profit 1 is going to be set at a ratio of 1:1. This is all dependent on where your stop loss is going to be set. So 1-to-1 ratio means if the price moves in profit the same distance as to where your stop loss is set, that take profit 1 is going to close that down for you and take some money from the market. Take profit 2 then is set at the next major support or resistance area on the 4-hour time frame. As you remember earlier, we talked about swing trading is all about capturing that one price movement, and that's why we set our major target at that area. But just remember, profit is profit, and there is nothing wrong with taking profit if the market mood changes. So for example, it could be going well for you, going in profit, then there's some news in the market, so all of a sudden the price starts reversing against you and you have a good feeling that it's not going to reach your take profit 2 target. There's nothing wrong with closing that down, and by doing that you're going to make more money in the long run. Don't be greedy. And then your stop loss, basically your stop loss is just set above or below the last major resistance or support area on your chart. It's important to note that once you hit your take profit 1, and once that's achieved, always trail your stop loss to break even. So what that means is once you've hit your take profit 1, you set your stop loss to break even. So if the price does reverse against you, then you're going to break even on the second take profit, and you've already taken take profit 1 from the market, so it's going to be profitable. And also, depending on how far your price has got to go to reach take profit 2, there's nothing wrong with trailing the stop loss up, so if the price does reverse, you're still going to capture more money from the market. But that can be done at your own discretion, and it's something you get used to as you practice this. The last thing I want to talk about then, which I think is really important, specifically with this type of strategy, is to make sure that you avoid the news. Now, always keep an eye out for big economical events. There are websites and apps you can use to let you know when these events are coming up. Avoid entering trades around news at all costs. The reason being is your setup could be really valid, then the news goes against you, and regardless of all the confluence you have in the world, it's going to stop you out. If you're already in a trade around news, if you can get the stop loss to break even, that would be great. But if not, maybe consider closing the trade. And if you don't, do it at your own risk. And just remember, heavy news announcements can cause unexpected market movements and may cause slippage leading to increased losses. Now, what slippage is, let's say, for example, the Fed make an announcement which gives a really bullish dollar, and you're trading the pound versus the US dollar, and that news makes the price move against you so quickly that your broker can't execute your stop loss in time before increasing the losses as to what you expected. So you may have only risked 1%, but then you end up losing 3%, and that's what slippage is. So that's the rules. I think the best thing now is to let's just get into it and see some live examples. So we're in the charts now. We're currently looking at AUD JPY, which is the Australian dollar versus the Japanese yen. It's one of my favorite pairs to trade, and you'll find this yourself. When you're trading on the different pairs, you'll find some pairs work better than others, but it's all down to personal preference. So in this case then, if you look at the top, we're in the 4-hour chart. If you remember when I said I use the 4-hour, and I mainly use the 4-hour to find my areas of value or my points of interest. Now, in the swing trading, if you remember, we're looking for support and resistance. So we're kind of going into sort of a downwards trend. The thing is, we can't just find a typical support and resistance on this one, because if you look, if we put an area of resistance up here, the price isn't quite reaching it. Now, this is where the power of the trend line comes in. So I'm going to go to my tools and I'm going to draw a trend line, because I can see a trend line forming, a bearish trend line around about here. So a trend line to be established needs to hit at least 3 points. Now, it's hard to find a perfect trend line. You can see the wick's just broken above here, but that's fine for me. This is still a valid setup. So for me to find my next area of value, we're sort of going into a bearish trend, and what I'm going to want to do is find a retracement up back towards this trend line, and once we're at that trend line, I can then look at my confluences. So let's just see how this played out. Bear in mind, this is on the 4-hour. I'll just slow it down a little bit so we can react to it. So it's coming back up, and not quite hitting. Okay, so for me now, we've hit the trend line. We're happy we've got an area of value, and we're thinking, right, this is where I'm going to want to place a sell. So I'm going to go into the 1-hour. And it's the 1-hour is what I use to actually place and find my confluences. So RSI. Now, it's not quite above 60. This is an additional confluence I do use. I prefer it to be above 60. But we are at a trend line. And I think the setup could be quite valid, because we are on a bearish overall trend. And it's always best to trade with a trend. It's a lot harder to try and find a buy in this scenario and find a retracement. It's something I do, but because you're trading against a trend, it's less likely to play out. Remember the main thing I've said about the MACD? So we're in the 1-hour MACD now. For this to become a valid selling opportunity, I'm going to want to see these cross into the bearish. So play the next candle. Okay, brilliant. So you can see here, and I'll zoom in for you, the MACD lines have crossed to the bear side. So number one, we have bounced off a high RSI area. This was above 60 and is starting to come back down. We're area of values on the trend line, and we've got a confluence now of a bearish trend, a bearish MACD cross, and the candles themselves are looking pretty bearish. We've had a couple of red candles, so I'm happy to take this trade. So the next thing I'm going to do is I'm going to use the short position tool. We're going to start our trade here. So this is our entry point. My stop loss then is going to go above the previous key resistance area, which is just above this trend line. This gives the trade room to breathe. So if it does retrace a little bit, it's going to give it time before it goes down. And I'm going to place my overall take profit. And I think we can reach lows of about down here. So this was a previous low before, a key low. So I'm going to bring my take profit somewhere down here. And then I'm also going to want to set a take profit 1. So I'm going to draw a horizontal line around about a 1-to-1 ratio. So my take profit 1 is going to be around about the same distance as the stop loss is away from entry. And the main reason to take profit 1 is because quite often what you're going to notice is that it'll hit your take profit 1 and then it will just completely reverse on you before it gets to your final take profit. And this is just make sure we're taking in regular profits from the market, which helps, me sustain my career as a trader and helps a lot with the balance. So I'm happy with this. We got stop loss set, our entry set, we've got take profit 1 and take profit 2. Now, the next thing you've got to do is just to see how it plays out. So let's see how it goes, is it? Okay, that was actually a bit more dramatic than I expected. So what happened then is come down, it's hit our take profit 1, and then it's shot way past our take profit 2. And actually, it was a really, really good trade. Don't expect trades to be this good all the time. It's kind of funny that I found one that works so well, because usually they take a lot longer to play out, but we'll see another example now. So remember, when I hit my take profit 1, what I would have done is set my stop loss to break even, and I would let it run on then. So let's just continue monitoring this chart then, and we'll see then what actually happens. So we've had one take profit on here. So again, I'm not really going to be looking for buys because we are in an overall bearish trend. I'm going to be waiting for another retracement back up to this trend line to look for another target sell. Okay, so we're getting back close to the trend line again. Okay, so you can see here, we've basically nearly touched the trend line. Now, we've got an area of value, which is the trend line. We've also got the RSI high, where at the moment it's above 60. The problem is with this entering this trade is this MACD is still extremely bullish because it's green and the lines haven't crossed. So it could be so easy right now to want to enter this trade, think, oh, this looks really good, I want a clean entry. But I'm just going to be disciplined. It doesn't meet my rules yet. See what happens to the trade. Okay, so look, it seems to be going up still. Okay, so what's just happened here then? If you look, if I zoom into this, the line seemed to have just crossed and it's gone red. So for me now, RS is coming off a high RSI. We're on the 1 hour and the 1 hour MACD is just crossed. And the reason we say the 1 hour MACD to cross, because if you look back at the 4 hour, then it's nowhere near crossing. And if you go off the 4 hour MACD, then a lot of time you're going to be late to the party and you're not going to get as much profit. So let's dial in our trade then and what we want to do. So we want a short position. So this is where the price is. We're going to place our stop loss above the previous high. And then we're going to bring our take profit 2 all the way down to these lows here because we've got there before. Remember, you're going to take around about a 1-1 for your take profit 1. So we'll put this line here to represent our take profit 1. Now we're happy with the trades. We've got our area of value, our confluences. We've come off a high RSI. We've also got the MACD cross on the 1 hour. Also as well, really big on this one, this is definitely what we call a bearish engulfing candle. So an engulfing candle means that a candle of the opposite color, the body completely engulfs the body of the previous. So you can see we've got a small bearish bullish candle here, which is in the green, and then it changes red, and when it closed out, it completely engulfs that body, and that is a sign of bearish momentum. If it was the opposite and it was a green candle engulfing the red, then it'd be a bullish sign. So you've got plenty of confluences, and we should be hoping that this trade is going to play out for us. Just remember, nothing's ever for certain. It's all about giving yourself the best chance to make profit from the trade. So, okay, you can see here straight away, hit take profit 1. So at this point, I've taken at least 0.5% back from the market in profit. I'm then going to place my stop loss to break even, so I know if it does retrace, I'm going to guarantee at least 0.5% from this trade and let it play out. And at least it takes the emotion out of it then. So you can see it's moving down. Now, something to consider, the trade's running in a nice profit now. It's coming to a potential resistance area here. You may think to yourself, okay, let's just represent this line as our stop loss. So our stop loss is currently a break even. You might think to yourself, okay, I'm going to trail my stop loss now, maybe just above this last movement here, because this potentially could act as resistance, a minor resistance point if the price does retrace. And if it does decide to go all the way back up, you're still going to take some profit from the market. Okay, brilliant. And there we have it. Another take profit too. So you can see over these two trades, we've had 2 out of 2 hit our take profit, which is absolutely marvelous. Exactly what we want to see. Now, let's just see what keeps happening. Let's just play it out again. Okay, so it keeps going this time. Now, you may think to yourself, why have I closed the take profit earlier? Always in the market, take your profits and don't be greedy. It will definitely benefit you in the long run. But if you did want to, for instance, let's say the price got to your take profit here, you could remove your take profit, put a stop loss somewhere here, and keep trailing it downwards if you wanted to. But something you can have a play about, especially if you're going for your back testing. So let's keep playing out the chart and seeing what's going on, and I'll talk you through what I see and how I may decide to get an entry. Right now, I'm going to go back to the 4 hours so we can get through the chart a little bit quicker. So it seems to be in a bit of no man's land at the moment. Maybe what I'm going to do is I'm going to add in another trend line around about down here to show the channel it was trading in. You can see it's definitely decided to sort of break this area and create new lows, but it's not something I'm happy with at the moment. And it's not kind of retracing back to this trend line. It's going to get there. Okay, brilliant. So you can see now it's made its way back all the way up to the trend line. So we're back at an area of value now. The RSI is creeping up, so it's showing it may be getting overbought. Let's go down to the 1 hour then, and let's see what's going on. So we're at an area of value, which is a trend line. You can see the RSI is pretty high. I think we're at exactly 60 now, which remember we say, look for sales above 60. And okay, so we're still green on the MACD. We've kind of broken above our trend line a little bit, but I'm not too concerned about that because it's never respected fully sometimes, as long as it doesn't show it's going to go for a full breakout. Okay, so what's happened here? RSI is 63. Remember, that's one of our confluences. We're in an area of value here. We haven't really got a bearish candle to go by. If anything, this can be seen as an actual bullish candle. So I'm probably, on this case, going to want to at least watch the next 1 hour candle close to see what happens. Oof, and you can see there, we've smashed our smashed the next candle all the way down and it's gone very bearish. Now, when you're trading this in the live market, when you see this big candle forming, you're probably going to get a better entry. It's only because I'm going back in time looking at these that it only shows the full candle at a time. But let's just say we did wait for the full hour candle. And even though the risk to reward is not going to be as good, we'll see how it plays out. So we're going to place a short position, which is going to be here. Your stop loss is going to be above your previous high. And my take profit is going to be, I tell you what, I'm going to be really ambitious with this one because we did make it all the way down here before. Realistically, I probably would have got in somewhere around here if I was looking at the live market. When the MACD just crosses in the live market, I would have got in. But for the basis of this, let's just go here. We're going to place our take profit one, about a 1-1. So we're going to get at least 0.5% from the market if it does hit. And let's just see how it plays out and how it does. Okay, so you can see it's probably teased you a little bit. This is the thing you've got to remember when you're taking these trades. It's decided to retrace and you're thinking to yourself, oh my God, you know, it's going to reverse on me, I'm going to hit a loss. But your stop loss is there for a reason. Don't ever close that trade early, let it play out. Okay, so this one's definitely a bit of a tease. Okay, we seem to be getting some traction to the downside. Okay, it's teasing you again, it's going back up. Definitely one you need to play out. See, the best thing sometimes is to just let these trades play out, don't watch them, because otherwise you're going to go for a roller coaster of emotion. So brilliant. If you notice, we did just hit our first take profit, which is amazing. We're going to bring our stop loss now to break even. So if the trade does reverse on us, we're going to get at least 0.5%. Let's see what happens. Going to press play on this one, I think. Okay. Ooh, we're so close to that. There we are. Another take profit. So you can see on this particular page, just using the trend line, we've got 3 trades, 3 sales. Now these are a bit of time apart. Maybe over the course of about 2 or 3 weeks. But when you're looking at all the currency pairs, you're going to find setups every day. Let's just see and continue to see what happens with the price then. See if we can see another entry. Okay, there's been some crazy movement there. Now this is when I talk about news. This is probably got something to do with the news that's happened in that time. Don't really know without looking. But it's obviously made the Japanese yen the Australian dollar dump, which has given the Japanese yen some value. So kind of in a new structure now. I don't really think that this trend line is going to be valid anymore after seeing such a dump. If anything, we're well oversold and potentially could be looking for buys, but really I want to see how this plays out before I do so. Okay, so let's go back to the 4 hour really quickly. I'm not really going to be looking at anything right now. I just want to see the price action start forming something for me that I like the look of. Because right now, it's a bit all over the place. So we've made a new low here. We've made a new high here. So this is sort of haven't made it quite this resistance. So potentially, as a sell, you could be thinking to yourself, this has swung up to this previous resistance. And if you remember my tutorial on previous support become resistance, this could be a perfect example of that happening. So we've come down, we've come all the way back up, we've hit this sort of old support area, and it seems to be having some sort of resistance. Now going into the 1 hour, I'm a bit late to the party on this one. Potentially you could be getting this a lot earlier. So I'm going to go back just to give it a bit more realistic entry. So when you're looking at it live, this is probably what you're going to see. It's coming up to a old support area. And RSI is extremely overbought. Okay, and it's at this point then, you're going to think to yourself, area of value is at a resistance, and we know that because it's old support. We've got a bearish engulfing here. If you zoom into this, you can see this red candle completely engulfs the green candle, meaning it's a bearish engulfing. RSI is extremely overbought. I mean, we're above 70 on this one, so you know this is definitely overbought. And then the MACD has just crossed to the red, which is exactly what we're looking for. So we're going to place our short position here. And I know I'm looking for shorts or sells on these, but it works in shorts or buys. And we're going to be looking all the way down here for our take profit. Now, take profit 1 is going to be about a 1-1, like we said. So about here. And let's use this line as our imaginary stop loss. So let's see how it plays out. Okay, so we've got take profit 1. Marvelous. I'm going to put my stop loss to break even now to see how it plays out. So you can see it kind of wants to break down, making some new lows, which is really good for us. Now, this is quite a big take profit target to reach. So completely honest now, what I would probably do is our stop loss, because we're getting into a lot of profit. I don't want it to completely reverse on me, and our take profit is quite ambitious. So I'd probably bring around about here, the stop loss down here. So if it does retrace, the next take profit is still going to take, well, probably about 1% profit there. Okay. Oof, nearly hit our take profit, and I think didn't quite hit then. So very, very nearly we hit our take profit. Let's see what happens, is it? No. So I think at this point, when I talked about one of the rules is take profit when you see price reversing, you're going to be that close to your take profit, then you're probably just going to close that down when you get there. I'm probably not going to wait for that to go all the way back up. But again, another perfect example of showing how this strategy works. So now I'm in a different chart. I'm in NZD USD, which is New Zealand dollar versus the US dollar. In the previous chart, we've seen good examples of using actual trend lines for the areas of value. We've seen examples for using just pure support and resistance for an area of value. I just want to show you potential setups you can use using the exponential moving average. And I think it's important because you will find setups that you wouldn't usually see just using, normal price action. So we're on the 4-hour chart here. And we can see that the price is tested around about the 100 and the 50 EMA. Let's see what happens. So you can see it's tested just past the 100 and the prices bounce back up. Okay, so we're definitely looking bullish on this price. Now, we know this is an area of value, these EMA areas, because the last time we got into those areas, it rejected and pushed to the upside. And we're just starting now a bullish trend. And it's always good to start at the beginning of these trends because they usually continue for quite some time. So we're in an area of value. Now, bear in mind, when I move to the 1 hour now, it's going to throw the moving averages way out because they start and get calculated from the 1 hour candles rather than the 4 hours. So we're going to ignore the candles at the moving averages now. We're just going to be looking for confluences to actually take our trades. So we know we're around about in an area of value. Let's go into the 1 hour. Okay, so we're in the 1 hour now. Still bearish on the MACD. The RSI is definitely oversold. Let's sort of see what happens with price. Wow, okay, so probably just missed this entry. We could have easily have got in, if we were watching this live, somewhere around about here. But the fact that this 1 hour candle is closed so far upwards, this really wouldn't be a realistic opportunity because I would be looking for my take profit somewhere around here. Now on the live chart, I'd probably when I see this MACD cross on the 1 hour, you're probably going to get in around here and you're going to place take profit up here. But you can see how quickly that price has went. So for me, I'm going to say this is a missed opportunity because the price just moved too quickly for me to get my entry. Let's just continue to see what happens with this then. So we can see again it's rejected out of the EMAs again. And we're going to wait for a retracement. And again, we're looking for buys in this market because it is a bullish trend now. How we know it's a bullish trend? Because it's creating higher highs, higher lows, higher highs, higher low, higher high, higher lows, higher high, etc. Okay, now it didn't quite reach our moving averages, so we're going to ignore that. Remember, you've got to be disciplined. Still not quite again, it's just giving us a little tease, and this does happen. Let's just press play and see what happens, see if we get any retracement, get any luck. Okay, brilliant. So we've crossed over now into the 50 EMA and we're in these lines. So we know this is sort of an area we want to look at our buying position. So if we go down to our 1 hour chart, RSI is extremely oversold. Brilliant. We've got the MACD is still bearish. If I zoom in, it looks like it wants to cross, but remember, we only take those trades when it actually crosses. So what's happened here? You can see it's just crossed. We've just gone bullish. We're in that 4 hour EMA area of value, and we're coming off our low RSI. So now it's time to put a buy in. We're putting a long position in. Here's our entry. Stop loss is going to go down past this key low, our last support area, and I'm going to place my take profit to the last high we've seen because this could potentially act as resistance, so it's a really good target for us to hit. Now let's take the horizontal line and use it as our take profit 1, and we'll get one of these and use it as our imaginary stop loss. You can see where I'm doing the stop loss with this trade. Okay, again, nearly hit our take profit. It hasn't though. There we are, we've hit our take profit 1. So I'm going to move my stop loss to entry. So if it does reverse, it's going to break even on the second take profit. Let's see what happens. To play this out now. Wow, that come really close then. It hit an R break even stop loss. It would have been fine if it did. Wow, that was really close. I mean, can't get much closer than that. Look, it's come within probably 10 pips or something, less than that, to actually hitting our stop loss before skyrocketing upwards. If it had hit our stop loss, that's fine. Don't try and re-enter trades out of the fear of missing out because it's going to lose you money in the long run. Always be strict, and if you hit your stop loss and break even, that's absolutely fine. That's not a loss. But in this case, we were lucky. And that's basically how we can also use the EMAs for finding our areas of value as well. So that concludes the video for today. I really hope you've enjoyed it. Now what I really want you to do is when you take this strategy away, go ahead and start back testing yourself, journal the results, get used to how it works, because although it is a certain set of rules and principles, it does take some training for yourself to recognize these patterns and actually execute the trades yourself. The more you practice it back testing, the more successful you're going to be. You may even decide to change 1 or 2 little rules yourself, and that's completely okay. Take these rules and make it your own to become profitable. Now, if you want to ask any questions or if you want any support, down below I'll be adding a link to my Discord where you can join a community of like-minded traders like yourself. I'll be in there to ask any questions, and I'll be giving full live analysis of the current markets and additional support to anyone who needs it. Also, don't forget to subscribe, like, and turn the notifications on for all my future content. Have a good day, everyone. Bye-bye.